Yo, yo, yo. It's an early video. Let's freaking get it. Okay? Man, look. Usually I wait until market is at least almost closed, but right now we got 2 hours left and I've seen enough. I want to give a shout out to Colin_Gladman on Twitter. He's been doing some crazy cycle analysis, and I'll talk about that briefly in this video. I also want to shout out Astro because he's kind of the fractal / cycle king when it comes to this on Twitter, as far as I can tell, as well as YouTube. And he's been a big supporter of mine, and I've been a big supporter of his for a long time. I want to shout out AMC Bigums for the fundamentals that I'm going to talk about in this video. He has brought to light so much information, and Young Investment here for bringing this to my attention, which is the basis for this video. And it's going to be me wrapping up all of my technicals that I've put into this thing, all of the focus that I've put into this thing over the course of the past few months. It's going to wrap it up with a bow, and it's going to give you guys my full conviction, what I believe is going to be happening with AMC stock in the next few weeks. So if you enjoyed the video, make sure you smash a like on it. Drop a comment down below to let me know your thoughts. I also have my Discord link, which is completely free to join, and my Twitter down below. You can follow me there, and without any further ado, let's get into it. So, man, Young Investment shares this with me from Yassine Course on Twitter. This is what appears to be a Fintel 13F filing showing that Fidelity was buying AMC on today, the 26th. Of October 2021. And he says, large operators always test the market for supply through a trading range. Examples are sell tests and springs, and at key points during a price advance, if considerable supply emerges on a test, the market is often not ready to be marked up. A spring is often followed by one or more tests, a successful test indicating that further price increases will follow. Typically makes a higher low on lesser volume. Look, guys, we've been talking about Wyckoff on this thing for a long time, so let's get into that first before we get into the cycles, and we'll combine them all together, okay? Let me find my accumulation. Okay. And let me pull up the schematic. So this is what we've been talking about. And when they say test, it doesn't have to go exactly in line with how this is drawn out, okay? What's happening is there's this trend line that we have that we've drawn here. We drew it way back here, right? August. These bottoms. And basically what is happening, and I'll show you through the fractals and the cycle theory, but what is about to happen here is we're going to have a break of this trend line again. And it is going to be the final, I believe, it is going to be the final stop, okay, before we step into the next phase of this move. And if you're not familiar with Wyckoff is a study of how institutions trade assets, and they do it in a process of accumulation and distribution. And I'll show you an example in the BlackBerry chart, and we'll get more in depth in this on another video, but this is an accumulation, a distribution schematic that played out over the course of from 2004 to 2011, and then a following accumulation schematic. So what's happening here is institutions are selling at the max price that they believe that they can sell for based on the supply and demand that's occurring at certain price levels. And then they're accumulating. This is what I believe is happening now, is that they're accumulating the asset. And they're doing this by shaking out retail at key moments to buy back in and push the price up and make retail want to buy again, thinking it's going to the moon before they sell off to them, followed by them making retail believe that that nothing is going to happen whenever it's at these lows, but then pumping up the price to get people excited and then selling off again in order to create this sort of market environment, right? It's a cause, right? You have a cause and an effect, and vice versa, a cause of accumulation and an effect of distribution. With that being said, this is the accumulation schematic that I have drawn out here. This is what we've been following. I mean, it's got to be for months, or at least a month and a half. And I believe that in combination with cycle theory, this is what has made this our entire thesis become possible. Sorry if you hear my kids in the background. So let's get into the cycle theory briefly here, okay? And then I'll get into the fundamentals and wrap it all up. Well, let's talk about the fundamentals. Let's do that. Okay, so I put out this tweet. Again, follow Young Investment Young. I said, Fidelity, who just made it available for mobile users to order on lit exchanges, bought the dip. Take a trip down Narrative Street with me, and I tagged a few people. So if you're not aware, Fidelity just put out a beta version of their mobile app that allows people to order on lit exchanges. This goes back to the AMC Bigums shout out and why I wanted to shout him out in this video. When ordering through lit exchanges, it makes it to where the orders have to be recognized by the stock exchange. You're literally ordering direct to exchange, right? And that's opposed to payment for order flow type. As far as I understand, a payment for order flow type of solution, which like Robinhood has, for example, where they give the order to the market maker and then the market maker does with the order what they want. So they decide whether it goes to a dark pool or it goes to a public exchange, et cetera, et cetera. And this could be a method for them to be able to manipulate the price. So Fidelity doing this, right? The fundamental, giving us the ability to order on lit exchange on our mobile apps, combined with them buying $146 million worth of AMC shares, is a clear signal to me that they are in on the ape narrative. Now, how long they're going to be in and whether or not they're going to sell or whatever, I don't know what that is. I don't know what the implication of that is, okay? But that's not, to me, in the short term, that doesn't matter. My conviction in this play has been that it doesn't matter if it doesn't matter if there's a short on dark pool at all, right? It doesn't matter if there's any like synthetic shares that are on dark pools from some crazy shorting event or anything like that from Citadel. It doesn't matter. Regardless of that, this thing is gonna move because it has the narrative, it has the retail support, it has all of these things. In institutions, big institutions like Fidelity, understand that at the right moment, if they can accumulate this asset and then make it pump, they are going to be able to get insane amounts of profit, especially on call options, for example. Call options right now are extremely cheap, especially out of the money ones. They're extremely cheap relative to what they were back here. I mean, a third of the price. And when you're counting in millions and billions, that makes a huge difference. Okay? So now let's step into the cycle realm, okay? I shouted out Colin Gladman. He's been the cycle guy that I've really been paying attention to on this thing. Most recently, at least. So look, you can simply put a bars pattern here, pull it from before the June run, right? Connect here, and then you can pull another bars pattern from here to this peak. Right? Man, I can't, I was telling Colin this last night. I was like, man, it just feels so fucking weird, man, to be able to do this. To be able to sit here and connect these dots in this way is unbelievable. And I'm sure that you can see here that as I piece this thing together, it is the same fractal. It is the same cycle that it's going through. So what does this mean? Look, man, what have we've been talking about Fibonacci on this thing since the land before time. Let's not talk about it. It was this Fibonacci back here, I think. Oh, wait, let's get from the top of here. Wait, no. What was it? It was here? No. Dude, I knew I wasn't smart. Shit, dude. Oh man, what a failure. All right. Doesn't matter. Doesn't matter. Let's not talk about Fibonacci. Follow Colin. He's done the Fibonacci analysis on it predetermined. I should have like pre-done those fibs. I thought for sure that I'd be able to do it. I did it earlier and it worked fine. Oop. Anyway. So to me, look, this all of this combined, the fundamentals of Fidelity, clearly they're doing something that is specifically about this matter. And then I mean that was like a few days ago or yesterday, and then it comes out today on these filings that they bought AMC at these levels. It's $36, $35, $36.60 is what this guy says. And you combine that with what's happening cyclically. I mean, if you draw a cycle, if you draw a fractal from here, this is just crazy stuff, man. This is the type of stuff that you'll get if you follow Colin. So make sure that you go do that. But basically, what he was telling me is, I think maybe it's like this. I don't know. It doesn't matter. This isn't what I do. You follow Colin. This is embarrassing. I know. This is my big moment, and look at me. I'm messing it up, man. But nah. So look, man. I mean, this pretty much wraps it up, dude. Like to me, like I said on Twitter, I've seen enough. To me, this is my conviction. I'm not giving financial advice. I'm not guaranteeing anything is gonna happen. But look at this on a more granular level, man. Like just look at it. All right. Just freaking, oh shit, that was a trend line. I don't want to delete that. Just freaking look at it, dude. All right. Look, I'll pull a bars pattern from here, okay? This is the 4-hour chart, by the way. And we'll drag it over to before the June run, the same section of the chart that we think that we're in now, okay? I know there's probably a more efficient way for me to do that, what I just did, okay? Know that. Dude, I'm telling you, man, that I have very high conviction in this. Okay, I have sat here. I've been living in this play for months now. I've interacted with the ape community at large. I was evacuated with my family for a freaking hurricane. I was talking to people on Twitter about this play, and at this point, I have not seen a moment that is more convincing than the one that we're in right now. Okay? And I know that it's easy to get this hopium spike and everything like that, but think about it this way. If the goal of the institution that is running this is what I believe, the bullish institutions are running this accumulation pattern that we talked about here earlier. Let's take this all off. And then put the schematic back up. I've believed that bullish institutions have been doing this, right, to accumulate this asset because they plan on pushing the asset. And I don't see a reason for the opposite for them, right? They've crushed call options, right, through IV getting sunk, right? Looks like we're having a bullish candle here right now. Through implied volatility getting sunk. You've seen the price action of AMC or the call options at least. It's I mean I remember seeing like $145 calls for like $3,000-$4,000, and now all of them are down to like $500-$600, right? The narrative, right? You look at it from like, imagine that it's the goal here. What would the goal be now to try and short this thing and drive the price down? What would you be attempting to accomplish, right? What message would you be sending? To me, that's what it's all about. I think that this whole buy button fiasco here that happened in January, it was all about sending a message. I think that's how I took it, at least. I took it as, hey, you guys thought that you were gonna win, but you're not gonna win, right? That's how I saw it. And now, like, the stock is boring. AMC is boring right now compared to what it has been. And if you're gonna send a message like this, why would you not send it at all-time highs? If that was your intention, right? If you're, let's assume all institutions are evil for a second, which we know is not necessarily the case. All institutions hate AMC and they want to see it fail. Even if that was the case, why would they not want to see this thing run and then cause that big FU moment to retail if that was their goal, right? And I'm not saying that that necessarily is what's going to happen or anything. What about to make money? Well, to make money, to short it to make money, right? What you'd be doing is you're fighting uphill. You're opening short positions. You're on a stock that's already got 20% short interest, by the way. You're opening short positions to what, get it down to $25, $20, something like that, because they understand that retail owns a certain percentage of the float, and there's a certain percentage of this float that's not going to be sold by retail. They know that. That's why when we were back here, when we were back in this $28 region, I said the absolute lowest that this thing can go is $15. I can never see AMC below $15 again, just because of the retail interest. You talk about the social media movement, the waves, right? Which way is it easier to make money? These cheap call options. You have this built-in narrative, this built-in, basically, social media following, not basically, but exactly, a social media following for this stock. As soon as AMC starts to pump to the upside, Fidelity and institutions like them know that it's going to send shockwaves across social media. I even gave this example to someone I was talking about, saying, you saw the movement with DWAC, right, recently, and Fun and all these other stocks that have pumped in the past few weeks. None of them have the built-in brand to their stock that AMC does, right? And so you didn't see DWAC on Facebook. You didn't see Fun on Facebook, anything like that. Yeah, on Twitter, a bunch of people are talking about it, getting it hyped up. But when AMC and GME were pumping in January and AMC pumped like it did in June, that was everywhere, right? The entire media was consumed by it. All of Facebook was talking about it. And guess what opportunity that presents to institutions, right? Take the short squeeze narrative off of the table for a second. Don't think about it. Fidelity knows that new retail money is going to come into the play when it gets above these crazy levels that you see here, right? And as far as MOAS goes, who knows, right? Who knows what happens from here? But just bear with me for a second and pretend like that doesn't exist. That narrative doesn't. That narrative, just pretend it can't happen for now, right? And Fidelity knows it can't happen. Just pretend. And they are saying, boom, we're going to pump this thing with this narrative that we have going here, because we know that a large retail following believes this narrative. Big explosion up. And I'm not giving financial advice, man. Like, I'm holding this shit, okay? Blow it up. That's what happened back here, and guess what? Distribution occurred, like we talked about before, right? Distribution occurred. They held price up in these levels here, so that they could sell at these maximum levels, $60-ish, the stuff that they bought back here, institutions, and they held it up here. And I'll never forget. I can't tell you how many bull pennants I saw getting drawn and stuff like that, supporting a further upward cause. That was all, dude, institutions were keeping that alive, man. They were keeping the hope alive at these levels. They were in control of this at this level. I mean, if that narrative doesn't exist, right? If it's not real, and I know a lot of people are going to give me flack for saying, oh, it is real. That's not the point I'm making. The point that I'm making is, if these guys want to make money, why would they not do the same thing here? Right? Why would they not? What if you were in their shoes? What would you do? I would do what's right. I would make a difference, and I would forget all that for a second. This is my conviction, man. Look, and look, it's not gonna play out exactly like this. I hope it doesn't. If it does, that would be really weird. But something like this, man, I am very, very convicted. And I'm not going to tell you guys what to do. You guys should do your own research. You should make your own financial decisions based on this. But this is my belief. So, with that being said, thank you so much for watching until the end of the video. It really helps out. Make sure you drop a like and comment down below your thoughts. What do you think about this whole narrative? Hopefully I didn't miss anything. I probably did because I kind of just let myself go, which is what I do in the videos. I just look at it as a teaching opportunity, and I really enjoy this, and I'm really pumped up about this. So hopefully you guys enjoyed the video as much as I did, and until next time. Oh, follow me on Twitter. Join my free Discord. And until next time, talk to you guys later. Woo! I'm jacked. Let's get it. Be one with the whales. Be one with the composite man. Be his friend, not his enemy. All right, you guys take it easy.